There's an interesting post on X by Antonio Garcia Martinez, who is a blockchain crypto guy, entrepreneur in that space, uh, pretty successful. Anyway, given the backdrop of all this argument about the jobs numbers and the contretemps over the Bureau of Labor Statistics flunky getting replaced by another back office guy whose name you'll never remember after the week of press. I thought this was sort of interesting. He posted two maps: the top employer in each state in 1990, the top employer in each state in 2024. In 1990, the top employer in the full Midwest, from Minnesota down to Arkansas, over to the eastern seaboard, the Carolinas, Georgia, Alabama, and then inward to Tennessee, Kentucky. Manufacturing sector top employer in all those states, including all those Rust Belt states, including Illinois, down to the eastern seaboard, over to, the middle South, Arkansas, Oklahoma, Kansas, Texas, and even the West Coast, California, Oregon, Washington. In 2024, the number of states where the manufacturing sector is the top employer has been cut by like a fifth, by like 4/5, and basically like about 36 states. 36 states, the top employer is healthcare, which, given government being the largest purchaser of healthcare in the country, and that was the case even before Obamacare, it speaks to a much more government-centric American economy. Here's his riff on these two maps, this Martinez guy I mentioned. One of my conspiracy theories is that much of the American economy is fake. Millions are employed in entire workfare industries like TSA, DMV, Postal Service, HR, plunging labor participation rate, and sky-high welfare, SSDI, SNAP rate. 20% of GDP is insanely marked up healthcare. Asset bubbles in cities are driven up by NIMBY and FOMO, fear of missing out. I think everybody knows NIMBY. All of this is propped up by an overvalued dollar, which the government can't stop printing, conveniently the global reserve currency, because our economic rival is a hermetic dictatorship. Yes, it does help to be the tallest midget, so to speak. Tallest skyscraper in Wichita, to borrow Buckleyism. He goes on, the only realish parts are a small, people-wise, tech sector that launders that bloated paper wealth into a fantastically dynamic entrepreneurial talent sorting machine, with much of the talent having to be imported, and a ruthlessly efficient services industry that keeps costs of living down for the well-off, with much of the labor having to be imported again. Well, if that's true, what does that implicate other than societies dealing with, a post-scarcity environment, I guess, one would argue. A lot of rent-seeking going on. I mean, the entire healthcare industry is built around rent-seeking because it's all backed by the government. Backed and driven directly in terms of pricing and so forth. Do we have a fake economy? I mean, is this all, sort of our Enron accounting and sort of phony baloney jobs that are predicated on rent seeking and wealth transfers? Could this be a bubble that pops, despite all of the prognostications that the things are going relatively swimmingly with 3% GDP growth and low unemployment rate and inflation that is moderating? I don't want to be a Chicken Little. I just thought it was an interesting observation, particularly when you look at the economic engines, the top employing sectors in each state, and you say, gosh, I don't think that's a map that America Firsters would celebrate. For more on this, Jim Iuorio joins us, host of the Future's Edge podcast, special contributor Wirepoints, wirepoints.org, wirepoints.com, and owner of Brandt's Restaurant in Palatine. Jim, thanks for joining us. Appreciate it.
Thank you for having me, Dan.
So we moved from a map in 1990, top employing sector, that was dominated by manufacturing with a dozen states that the major employing sector was retail, to 3/4 of the country, it's healthcare, a little bit of manufacturing, a little bit of retail, hospitality in Nevada and Wyoming, and that's it.
It's quite amazing. So the manufacturing part of it, there's two different elements to the discussion first, because manufacturing was always going to kind of go away as trade routes opened and we could take advantage of cheap labor in Mexico, cheap labor in East Asia. But it happened so much more quickly than it should have that it was disruptive, and that was due to regulation. It was currency manipulation by the Chinese that was blessed by the administration back in the 90s, and they took all our manufacturing in 18 to 20 years in what should have taken 50 years. And that disrupts market. It disrupts small town America. Now, back to the government jobs portion of this. The last 4 years, these economists from the left would keep coming on and telling us how good the economy was, while at the same time we were racking up $1 trillion extra debt every 95 days by the end of it, and the huge preponderance of the jobs that they claimed were created were government jobs. And I love the fact, and you pointed this out, and I'm just going to reiterate it again. We talk about healthcare and TSA and all these companies that are supposed to be private, but the government is their basically only customer, yet they're government jobs too. And arguing otherwise is just completely semantics. So have we built a fake economy? To a certain degree, the answer to that is yes. I mean, we're still America. We have resources. We have people. We have brains. We have the tech sector. Can we pull ourselves out of it? I think the answer to that is yes. But is there something that's fake about it? I don't think there's any question at all. We have a $37.2 trillion national debt, and it just keeps growing to try to support this bloated collectivist government worker glut.
Well, and then so then how do you see how do you see AI factoring into all of this? I mean, but part of it is these sectors that are already efficient and technology driven, including manufacturing. It seems to me will get more efficient and generate more productivity per marginal worker. But the sectors that are insulated from those bottom line sensitivities from market accountability, which includes a large swath of the healthcare sector, won't, because they don't have to, or they certainly don't have to at the same rate. And so, how does that all this talk about displacement, but when you have all these guarantees and the left wanting more guarantees of employment, that a job is a right and workers should have more rights vis-a-vis their bosses, just like the people should have more rights vis-a-vis their political representatives. I mean, this argument that is taking hold in big cities with major employers and some states generally. So how do you see that shaking out in terms of American vitality, I guess?
So anytime there's a planned economy, you hit on exactly why it has to fail and always fails, because capitalism, for all its flaws, allows for the nimble change and transfer of capital to be allocated towards different areas. When government controls any portion of the means of production, and even if it's a small portion of it, that's not the way it works. All decisions are made for political reasons and not for efficiency and and profitability things. So there's no question that this is a bad place we've gotten to. The AI thing is amazing and terrifying all at the same time. I mean, the ground is shifting under us, I think, faster than at any time in my career or in life. And I think the people who learn to adapt to it are going to be very well off. And it's not. And chasing it, the investment part of it, everyone thought, okay, who makes the chips? Who makes chips? But now everybody is kind of all at once talking about who is going to utilize AI to become more productive. And to your point, that means less jobs. We had one of my favorite analysts, a guy by the name of Luke Roman, was on our show a couple months ago, and he said, we are angling toward a time where a plumber is going to make more money than a partner at Goldman. And at the time, we laughed thinking that's a joke. as a joke, but it's not really that much of a joke. The tech sector, the whole white collar sector, is being uprooted. And I also have the theory that AI is more prevalent and deeper rooted than even is talked about. Because when Bank of America boasts that they're using AI to eliminate their HR department, that's great and it's good for share price. But when small law firms, accounting firms start using AI all the time, they don't really want to talk about it that much because deep down they fear that it's going to replace them. So I don't think they're talking about as much writers, things like that. So I think AI is moving faster than people think. It is a huge productivity boost, which is good for the inflation part of this debate, but it's not good for the employment part of this debate for obvious reasons. Does that make sense? Your question was long, too, so my answer had to be long as well.
Yeah, no, that's just fine. Proportional response. No, I agree. That was, yes,
exactly.
It was very tempered. Well, it's hard to get, it's difficult. I struggle to get my arms around this as well. I think a lot of people do. Just trying to see where, not only where this is going, but, what is the underlying structure upon which this is taking place? How sturdy or vulnerable is it really? It's
there's two different answers to that, though, Dan, because one is how sturdy is it really, but the second is how sturdy is it compared to the rest of the world, and which, by the way, it's a good thing because we definitely have advantages in a lot of ways, but it's because of this, it's this idiotic notion of the people who are stewards of our currency and our economy. They look around the globe and say, well, these guys are making all these huge mistakes, so we can too. It's asinine. Yeah.
Well, I mean, it's one of those things too, where this debate is going on about AI in terms of, what is the onset going to look like? It's, is it going to be, a robot takeover in the foreseeable future, sort of all at once, or is it going to be, as William Gibson described the future, it's already here. It's just unevenly distributed, and it will just sort of, in a methodical way, manifests itself. Like there was a good interview. I mean, it was okay. Don't want to get too complimentary. Ezra Klein interviewed this economist. You probably know Natasha Sarin for his podcast at the New York Times. And they were talking about it, and he mentions ATM. Obama used to talk about the ATM as technological innovation, and it replaced bank tellers, but it improved life, and it didn't bring on this, sort of collapse in employment that technologies like the ATM were. People were afraid technologies like the ATM would do. In fact, there were more bank tellers in the early days of the ATM. Now we have fewer bank tellers, but the point was the onset of it was much more gradual than predicted as the technology took hold, and then businesses could make adjustments accordingly. And one wonders if that's more like what is going to happen with AI, such that people in their 50s and 60s right now who need a few more years of working before they can retire are not going to be suddenly vaporized by the new AI paradigm.
Well, I'm still of the belief that it's going to do better things for our way of life than it is going to do worse and eliminate jobs and things that we used to do on our own. But I'm not as convinced of that in time. You mentioned the key word is gradual. When technologies come around, they can be destructive. It's Adam Smith's invisible hand. That's the beauty of them, provided everything shakes out in a gradual way and something that's acceptable for all. I am a little bit more fearful than most technologies about this one, about how radically it's going to change our life, and I don't necessarily like what's going to go to. But always, throughout history, everyone has complained about technology. The electric light bulb was going to put all the candle makers out of job, and it did. But if it happens at the right time, like Henry Ford, he said if he asked the people what they wanted, you know the quote, they would have said faster horses. So I mean, these are things that we don't know where they're going, and to think they are. But again, it's always been this trajectory. I mean, we look back at our life in the 60s and the 70s and think how wonderful it was. I think if you and I were beamed back to 1975, I think there would be about a 6-month adjustment period where we wouldn't know how to even negotiate it anymore.
The butterfly collars alone. Yeah, exactly. Yeah. I mean, the style alone would be difficult. I don't want to dress like Starsky and Hutch,
Oh, no, I want to rock a leisure suit again. I had a plaid leisure suit in 1975. I slayed it. You would have loved it.
Even the golf course. I mean, watching like guys like like Nicholas walk around on the course in those pleated, those like checkered double knits and those
You could
ti
have killed those. You would have pulled that off.
tight fitting shirts with the big collars and the roly poly bodies on tour. I mean, that would be no.
Yeah,
No, I don't want to
yeah,
go back.
awesome is what you're saying, right?
Yeah, I don't. I hear you. I don't want to go back. All right, let me ask you another question. So just sort of like bringing us out of the ethereal and back to terra firma here, short term. Financial Times reporting the gap between U.S. companies' borrowing costs and Treasury yields has shrunk to its smallest since '98, after a rally in global credit markets. The cost of borrowing for investment grade companies in the U.S. and Eurozone credit markets is 0.75 and 0.76 percentage points above benchmark government bond yields, respectively, according to Bank of America data. So, does that mean that the volatility that we've heard so much about is a bit overstated? Volatility in credit
No,
markets?
in my opinion, it's actually when I see that start to happen, when credit spreads start to narrow, and for those people who are listening who aren't that into it every day, what it means is that people aren't respecting the risk difference of lending to company A versus lending to the U.S. government. And when that spread gets narrow, and I know you know that, Dan, but I think to me that's when I see volatility, options volatility in the markets really low, when I see credit spreads really tight, to me it seems like it is an indication that we are not respecting risk. We are getting lulled into a belief that nothing bad can happen. You and I are old enough to know
exactly.
something
Yes.
bad can't happen. Right, can't happen. And I think that.
But wait. But you have to say, so we're being lulled into it. You say, but wait a second, the market is always right, and they're saying that there is no risk. That's what the market is saying.
All right. No, the market is not always right. The market is forward-looking. The market is often right, but it is certainly not often right. And every time we've seen big, deep corrections or even bear markets, it's usually not every time. It's usually, I sound like Yogi Berra there. Every time it's been born of incredible complacency going into it. So that complacency always works. And it goes back to Warren Buffett and Charlie Munger saying, when everybody else is panicked, we get greedy. When everyone else is greedy, we get panicked. So right now we're seeing nobody panicked right now. Everybody is greedy. They're looking for that little bit extra that corporate lending can get them over U.S. Treasury. So, are they dropping the bone for the reflection? That was like some sort of parable or something?
Dropping the bone for the reflection. Wow, that's a deep pull.
Is that a real one, or did I just make that up? Is there some sort of parable about a dog who sees a reflection of a bigger bone and goes for that, or something like that?
If there's not, there should be. Yeah.
There should be.
So is this a time to be a contrarian then? Everybody else is talking about piling up in equities, and things are going to, be pretty good for at least the rest of this calendar year. And so should people become more bearish? Is that what you're saying? Be contrarian?
People should become more conservative and more. And anytime people are talking about a stock market that goes only in one direction, it's time to be a little more worried. Now, I don't. Of the people who come to me and ask, I don't know that it necessarily is time to short anything, but I'm putting on extra put protection. Most of the people who are listening to the show that's not available to them. They don't know how to do that. Although the amount of people who do that has been exploding. So if they're selling you, and again, you can buy cheap portfolio protection like insurance. When we talk about volatility being low and complacency, they sell it to you for even cheaper. And these months, August, September, and October, can present hurdles for the stock market. We've seen some bad things happen these months. So whether or not why the seasonals happens is unimportant, because it sometimes does happen. So I am a little bit worried about the stock market, but not over the top worried.
All right, Jim Iuorio. Oh, wait, one thing quick, because we're short on time. But what does the Fed do in the next few quarters? Are we going to see rate cuts?
Yeah, I do think we'll see rate cuts. I think he's pressured so much into it that he basically has to. But here's what we look for. When he cuts rates in September, look at what 10-year yields do. If 10-year yields shoot higher, that'll mean the market thinks it's inflationary and the wrong time for him to cut, just like what happened back in September. But if he cuts 25 basis points to the short end rates and 10-year yields go lower or stay the same, that'll be the market, which is the smart money, which isn't always right. We've already established that it's usually right. We'll be telling them that it is the right time to cut. I personally think it is the right time to cut, and he should go 25 in September.
All right, we'll be looking for that. Thank you for those leading indicators. Jim Iuorio, host of the Futures Edge podcast, special contributor to wirepoints.com, and the owner of Brant's and Palatine. Jim, thanks as always.
See you, Dan. Have a good day.
You too. He joined us on the Turnkey.pro answer line, and coming up